morning, everybody, and welcome to What's Hot on the Open, taking a look at all the action here in the U.S. on MarketStream.live. My name is Joseph Cusick with the Cusick Group Securities offered by MoneyBlock. Let's kick it in. Right now, the markets are on the downside. You see the Dow Jones Industrial down 166, down 0.8% at 20,431. Folks, the battle line has been broken. The 50-day moving average is in play. Markets opened up below it and now have challenged it. Let's see where it settles. But the Dow right now is in the red, and the intermediate term bulls are now under pressure. We're going to watch this action very closely. The inability for the Healthcare Act to get passed through Congress basically puts a ton of headwinds in all of the other components of the president's total electoral landscape. So we're going to watch that one very closely throughout the day. You see that the S&P 500 down 20 points, almost 0.9%, 0.89% at 2322.80. Again, breaking its 50-day moving average. The bears are starting to gain some traction. I said all along, we're going to watch this area in the 20 and 50-day. Those are our psychological as well as our visual barriers, or in this case, those were our support levels that we'll watch, so it gives us context when we see weakness. What do we do then? Then we start looking for strategic approaches to take advantage of this weakness in the market. Taking a look at the NASDAQ's actually holding up very well. Large cap tech has been the silver lining throughout, especially in the last week. You can see that the NASDAQ is down right now, down about 41 points at 7.77% at 53.23. You can see, though, it just broke its 20-day moving average on the open, but it's well above its 50-day moving average, which is coming in at 52.60. This is important to know because tech is where you could actually start looking at potentially seeing if there's any vol increase, adding to certain names, especially in a pullback, or you can look at it as a sector and adding it to your portfolio or building upon it, especially if there's some strength in there. Watch the semis and large cap sectors, tech sectors right now for opportunities. We'll talk more about that in upcoming episodes of Strategy Now. The Russell 2000, not holding up well at all. It's trading on its lows, down 18, down 1.35%, or 1336.28. This domestically centric small cap stock index, it's going to get pressured now that healthcare, now tax reform is going to have headwinds, trade policies and so forth are going to have some headwinds. Bottom line is that with the climate that's in Washington at this juncture, and you're in small caps or you are vested in small caps, you're going to be under some pressure here. Watch that very closely. I am not prepared to say that I am willing to add small cap exposure on this pullback. As a matter of fact, I'm going to be looking at probably the 1300 level right around here. Right here, right around the 1312 area. That's where I'm going to look for next level of support. Otherwise, you're looking at the 200-day moving average, which is coming in at 1279. So that's where the next level of support long-term is. And again, this is going to be something where you want to take advantage of the volatility in the markets. How do you do that? Go back, as I discussed last night in the Sunday night setups. You can start looking at strategic approaches if you're a bull and you're seeing a pullback. Instead of just waiting and trying to time perfectly, getting into certain stocks or indexed or sector ETFs, start looking at a strategy like selling puts. I go over all this in Strategy Now. As a matter of fact, if you go to the MarketStream platform and you go to the latest videos and you go to Strategy Now, you can see where I actually talk about ladder puts, where you can start selling puts to get into long stock. Now, we'll also talk about doing bull put spreads. If you don't have enough money to own the stocks outright, in other words, purchase 100 shares, you can actually do a spread that will fix your risk, but it also fixes the capital that you need to require to participate in that position. But right now, the markets are under stress. What has been moving to the upside is VIX. VIX is at now 1480 at the highest levels that we've seen basically almost in all of 2017. Right now, yes, we are trading at the highest levels we've seen in 2017. So that means that there's a heightened sense of potential violent moves going forward. Can this withstand? I don't know. What I do know is this. These are the opportunities that if, let's say, for example, you own stocks, calls are going to have an elevated implied volatility because of this sharp pullback over the last two sessions. This could be an opportunity to write some calls against your stocks. If you are in stocks that you want to cost average into, instead of buying the stocks outright, look to sell some out of the money puts, take advantage of that implied volatility. Take a look at the dollar. The dollar continues to tumble, and I don't think this is going to be a story that's going to end until we start getting to the level of right around 98.60 on the dollar. Dollar weakness has had an impact on global currencies like the pound in Britain, the euro, the yen, the yuan. All of those have strength this morning and for the last few sessions. This dollar weakness, again, not a safety trade anymore. We'll see if that continues. That has not helped out crude, though. And what was notable is that we saw that in the Baker Hughes rig count, the rigs that are going online, they added 20 more rigs going online. That means that they're pumping more oil here in the States. And as long as they're going to continue to pump oil, that means that we're going to have a larger supply on hand, which means that oil is going to continue to glut up there. That's not a positive for the oil West Texas contract. We said we were going to watch $47. A break of 47 means that we could start looking at $45 pretty quickly. $44, $45 is the next level of support right in this area, 46 to 44. Watch that closely. The fixed income markets are to the upside. You have the 30-year, the 10-year all up. And then I want to take a look at a couple sectors. I'm going to scroll down real quick. I want to look at finance. Finance right now is down 1.9%. Taking a look at the XLF. Trading now at its worst levels. It broke over a week ago its 20 and 50-day moving average. We noted before even this move occurred with the inability to pass healthcare that finance could be in trouble, especially and that was triggered by the fact that we saw the move in bonds. Bond prices went up, yields went down, financials were under pressure. The tax reform and repatriation component of tax reform is going to be under pressure. We're going to watch that activity out of Washington very closely. Finance under pressure, so you're going to see names like Bank of America. Again, looks almost exactly like the XLF. Take a look at Morgan Stanley. Morgan Stanley looking just like the XLF. It's almost like you just took a snapshot of every single finance stock. Drop, consolidation, drop. These are under pressure. For those of you that are in these stocks, hopefully you had written some premium against them so that you could reduce your cost basis. You're looking to roll potentially down and out now that the market move has occurred. You got JPM down at $1.30. Again, you're seeing a similar one. Now, JPM is holding up much better than its peers, but still down. Then you have metals and mining. Metals and mining have been under pressure for the last couple sessions. That's impacted not only names like Cliff Resources, which is down right now about 4.5%, as well as U.S. Steel. You see that's down 5%. These two components alone make up about 10% of the ETF XME. So you're also seeing that the infrastructure plays that everyone was anticipating and getting passed and getting put in motion in 2017, well, they could have some serious headwinds now with this uncertainty about whether or not Congress and the Senate can actually get their act together and get stuff moving. There's a lot of hope and promise in this market, folks, and it looks like these headwinds have a few of the retail as well as institutional investors scratching their heads, putting some doubt in the market. All right, folks, that's it right now for what's hot on the open now. We're going to be back at 1:30 Eastern time. I'm going to be covering some strategies where you can start doing, I'm going to cover a repair strategy. So if you have stocks that have taken a hit over the last 24, 48 hours or in the last couple of weeks, this repair strategy is something that you can utilize for your portfolio. All right, folks, we'll see you at 1:30 Eastern time here at Strategy Now.